Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, at present, the Australian dollar is attempting to recover since rebounding off the 71.30 area. At present, though, the market is struggling. However, I'm still keeping a close watch just in case we do see a slight climb, that is towards 72.40, and reassess from there, as a break would see a further rise up to 73 cents. Still, the market is still a little bit on shaky ground since Friday's fall, and that is that we could still see a little bit more of a roller coaster ride to the start of this week. The euro also is attempting to restage somewhat of a recovery, but could end up being a dead cat bounce. And what I mean by that is, the fact is that we could still see a further test down, and that is towards the region somewhere around 106.1025 and reassess from there. And it's getting a little bit difficult now as we get closer towards that 105 area due to the fact is that we are oversold on the monthly and on the weekly, and also a little bit of divergence when we come to the dailies. So I don't really want to get too bearish at the bottom side of this range, but in fact of the, or more to the point, in light of the recent strong rally of a 20-month high for the US dollar index, which measures the greenback strength against a basket of 6 major currencies, and the euro weighted at 57.6, is the fact is we could see further climbs in the dollar index to 103. At present, it's trading around 101.5. The dollar yen still more to the point in slight limbo at this level around the trend line at 127.55 to 75, or around that area. We did get a brief stab earlier today at 127.33, but the market is still relatively weak. I feel that a significant break and a close under 127.55, 65 would give further indication to a further bear case, and therefore could see some profit taking, because it has been some while this trend has been going, with the ADX now finally depleting its bull trend at extreme highs around 85. And also the fact is that the extreme highs that we saw with the RSI has now plummeted and now giving us a negative signal and marrying up near enough to a negative case with the MACD. Keep an eye on this level though. The market did seem to struggle after that doji, and nevertheless, as I mentioned, the European session coming in, we are getting a bit of weakness, so we could see this continue down towards a potential target of around 123. Sterling, after displaying quite a heavy 2.5-day session, the market is attempting to recover. I don't want to get negative down here. I feel the market may actually stage a bit of a recovery, and quite surprising that we did see the market shrug off pretty much some hawkish comments from the Bank of England's one of the members of MPC, that is, and therefore could see this rise back to about 128 and reassess from there. The call for sterling Kiwi was to 194.2040. After 2 stabs there, the market has dropped down, and now looking back on course for a negative case to 191 and reassess from there, as we may see a little bit more weakness down towards 189.5. Gold, well, since the market's taken out significant levels all the way down from 1,920 and now looking closer towards this level, which is key at 1,878 to 82. This challenge may actually see a short-term rebound, because the market has, in the previous contests of this level, staged a rally, and therefore keep an eye on the market if you're trading from a short side, and continue to lower your stop losses according to your risk management in case we do see somewhat a short-term bounce. And wrapping up with oil, well, the market is still weighing on this support level around 97, and I feel that we could eventually see it give way and expose a region of 92 to 93 as a potential target, which was given from the rejection from 109 figure 50. Well, that wraps it for today. Thank you very much for joining. Please keep an eye out for the intraday report. I hope you enjoy the rest of the day.